Cody and Taylor with the B2 Ranch Group. We're doing a little video series about all the things you need to know about owning a ranch. Today we got a guest with us, Zach Garrick. Zach, why don't you introduce yourself to us? Tell us what you do.
Yeah, I'm Zach Garrick. Been in crop insurance now since 2005, and we pretty much insure farmers and ranchers all throughout Texas, New Mexico, Oklahoma, um, Louisiana, just pretty much the surrounding states. And but yeah, we pretty much cover about anything. Federal crop insurance is pretty wide topic. You can talk about it for weeks, and for how many different policies there are out there.
So Zach, what is one of your main products you have here in Texas? Like, what is one of the things that we're seeing the most of when it comes to crop insurance here
Yeah,
in Texas?
Yeah, so here in Texas, we got your multi-peril crop insurance that covers all your crops. So we cover corn, cotton, wheat, grain sorghum, rice, soybeans, you name it. We can cover it, and so that's pretty much predominantly the first one. The second one is PRF, which is pasture, rangeland, and forage insurance. It's a uh, drought insurance for your pastures, for hayland or grazing land, and those are pretty much the two biggest ones we insure throughout the state of Texas.
So, I mean, to the layman, this sounds like something that would be for commercial producers. Somebody like 44 Farms, something like that. But that's not the case, really, right? I mean, any farmer or rancher can access this.
Any farmer and rancher. So most farmers, will take out something similar like the revenue protection, covers their price and their yield on their crops, and a lot of banks, including like Ag Trust, people like that, they will require the farmers to take out crop insurance if they're going to ask for an operating loan. And that's where we come in. We insure their crops out there, whether it's for hail, for wind, for drought, for flood. Um, so if a guy has 1,000 acres along a river, and all of a sudden he has a 100-year flood, and his 1,000 acres get flooded out, that's when we come in, and a claims paid.
Right.
Based, it's all paid by federal crop insurance. It's also federally subsidized. RMA USDA is in charge of all of the uh, crop insurance. They look over all the crop insurance companies, and so that's how that works on it. But like like you said, on 44 Farms, somebody like that, a commercial company, cattle company. So we also insure people like that
Okay.
for their pasture land, for pasture and hayland.
Hmm.
So if it's dry in a 2 month period, um, then we can technically they can collect something.
You kind of walked into my next question there. I was going to ask about drought insurance. Is that, I mean, you answered it, but just go a little more in depth. Because a lot
Okay,
of people may
so
think that's going to be a whole year of rainfall, but people know around here we may get 10 inches in 2 months and not have rain for 4 months.
exactly. So that's what's good about this program. This program PRF, it's fairly subsidized, like I said earlier, like all crop insurance is, and pasture, rangeland, and forage is what it stands for. And what you're doing is you're covering against drought, um, and it's based in 2 month increments. We look up your ranch in a pretty much it's about a 14 by 14 mile grid roughly, and you're insured in 2 month increments. And depending how much it rains in that 2 month period, depends if you get paid or not. Um,
Okay.
the most people take out about an 85%. Most of our customers take out an 85% policy. Um, it's subsidized at 55%, so the government's paying 55% of the premium. The farmer rancher never sees that subsidy. It's they're just cheaping up the premium to make it affordable to the producer.
Kind of like what you'd see right now in the open healthcare market. You get federal subsidies based off income, things
Yeah,
like that. So your premium may actually be $1,200 on health insurance, but the person's paying $400 out of pocket,
exactly. Yeah,
something like
yeah,
that. Yeah.
yeah, yeah. So the premium is going to be cheaper for the rancher, and based on every 2 months, depending what that rainfall comes in at, depends if you get paid or not. And like you said earlier, you've seen it so many times where we'll get 8 to 10, 12 inches of rain, which you've seen it. We saw it last week here recently with all the flooding here in Central Texas. You can get a lot of rain in a 2 month period. Well, then every 2 months it starts over. So
Okay.
So it's definitely like, come May 1st, it starts over, for the May, June interval. It starts over June 1st for the June, July interval. So there's a lot of different options there. Um, but long term, it's paid very well here in Central Texas because of the droughts we've been having. I feel like we've been a little bit more extreme than usual. It's either flooding or it's not raining at all.
Right.
Um, so technically, on that situation, it's paid a lot over the last 10 years. I think right here in Waco area, I think it's made a profit 8 or 9 out of the last 10 years the program has. And and even and it also and the good thing about federal crop insurance, it benefits everybody if you take it out. Like, FSA Farm Service Agency, great program. They have great programs in there too as well, but they are also, they have a income limit. So if you make over $900,000 a year, which some ranch owners may, if they have
Right.
different companies, different businesses, and everything else, well, they don't qualify for any programs or any money, for any disaster, or anything like that through the FSA office, Farm Service Agency. So that's where we come in. No matter how much they make, we can insure them. Whether they have a large ranch in West Texas, South Texas, or just 100 acres of hay.
Right.
But it's all based on your rainfall in that grid in that 2 month period. And if it's dry in that 2 month period, you get some money. So pretty simple. Yeah. So so we have a December 1st. Our pasture rangeland. We have different deadlines for every program through federal crop insurance. So December 1st was the deadline to sign up for the 2024 year, and then this upcoming December 1st will be the deadline to sign up for the 2025 year. And on the pasture rangeland forage, you have to have the intent to hay it or graze it. So if I have 1,000 acres of grazing, then I've say, okay, I'm insuring 1,000 acres of grazing by December 1st. And then if I have 1,000 acres of hay, you have to say I'm insuring 1,000 acres of hay. But that's the intent. Every year is a little different. You may be insuring 1,000 acres of hay, and you may end up grazing all of it.
Yeah.
If it's never rains, because you're like, man, I can't make any hay because we're in the middle of a drought. So, but you're supposed to have the intent when you go ahead and insure it. Yeah.
Okay.
So do these federal subsidies, do they fluctuate each year? And I mean, I guess these are kind of made to the best the government can promote USA farming and cattle raising, correct?
Yeah. Yeah. The subsidies stay the same pretty much. Everything kind of depends on the Farm Bill and the SRA. They get passed through Washington. But most years, the subsidy stays right about the same. Like for instance, on the pasture rangeland forage, 85% coverage policy. That's when the rainfall falls below 85% of normal. You're going to start collecting something in that 2 month period. Well, that 85% policy is about 55% subsidized.
Okay.
But if you go up to 90%, which is it's a risk, you're going to collect more often than 90. That subsidy drops down to 51%. So you're paying a little bit more premium on that 90% coverage. But yeah, most subsidies year in, year out, they stay pretty much the same.
Okay, gotcha. And then, we're talking about droughts right now. Run us through a case like we're in right now, extreme flooding. That drought insurance probably cancels itself out. But how about the crop insurance for guys who are underwater?
Yeah. So right now, like we on the PRF, we're all 3 intervals so far this year: January, February, March, April, and pretty much May, June, because we've had so much rain. It's probably going to be knocked out as well. So those won't collect, so far. But most producers still have 3 more intervals left, at least minimum of three more intervals. But on the crop side, so it's all based on your yield. Farmers keep track of their yields every year. They keep the track of their yields per field, by farm number, by field, and each farm has their own yield. So if you've been farming for 40 plus years, then you're going to have a lot of yield history, and you're going to use the last 10 years. But if you're a brand new farmer, you're just starting out, you take four of the last you take four of the county T yields. So that's going to be your average.
Okay.
And so that's where so technically, you're insuring your farm not on based on rainfall like we do on the PRF. You're insuring it based on your yield.
Okay.
And then we have something called revenue protection on your crop insurance, where you are covered based on price and your yield, and depending on if you have a loss or not, then that's pretty much how that program works. Say, for instance, you've been farming for kind of have you an example here. If you've been farming for 10 years and you have the last 10 years of this particular farm here, your average is 100 bushels over those years. Well, this year you're insured at say you're insured at to make it easy to say you're insured at $5 a bushel, okay? And let's say we're doing corn, insuring 1,000 acres of corn, 100 bushel average at $5. So a customer will take out, say, 70% RP policy. So 70% times your 100 bushel yield is 70 bushels. So anything below 70 bushels, you're going to start collecting something.
Okay.
But the price also works into there too. So you times that 70 bushels times $5. So technically, you have $350 of coverage. And all farmers right now know that everybody has over $350 an acre in their corn crop.
Right.
So you don't want to lose your crop. You're trying to do as much as you can to make a good crop.
So, I mean, this can protect anything that affects yield: extreme drought, extreme rainfall, insect infestation. If they go under their yield amount that they're insured, they're going to be covered and get help.
Exactly, yeah. As long as they have good farming practices,
Right.
as long as they're trying, that's the biggest thing. As long as they're spraying for insects, doing this and doing that, they're trying to make a crop, then you're good. You're good. And one thing people don't realize too is, the farmer, we're all trying to make a crop as much as we can, because say for instance you get flooded out and you don't make anything. Well, that yield there goes into your 10-year average. So next year, instead of $350 an acre coverage, it may drop down to, which also depends what the price comes in at. It may drop down to 320, and then if all of a sudden you're borrowing $400 an acre, from the bank, and you have a disaster, you're losing money.
Right.
So, and that's the thing about it, is farming now is crazy expensive compared to what my dad's been farming for 40 plus years, and compared to when he first started out, it's amazing how much money you can spend now farming compared to what it used to be.
Well, absolutely. I was actually about to switch gears a little bit. I want to talk about you and how, obviously, you're a farmer around here. Most obviously people probably don't know that, but
Yeah.
you farm around here. What got you into crop insurance? Was it watching your dad go through struggles and leaning on crop insurance? And you said,
Yeah.
I liked how that
So
helped us out.
Well, yeah. So I got out of A&M in 2005 and moved back home. And my oldest brother was pretty much he's about six years older than I am, and he started farming, pretty much taking over the family farm, and then my other brother, he was home too, and we were just kind of working part time on the farm. We're working for free.
Right.
We're trying to make ends meet, because and at that time we had a custom cotton stripping business. So a few years there, we stripped cotton all across Hill County, right around here. We'd strip a couple thousand acres there, and then we'd haul all our equipment up to Dumas, which is north of Amarillo, and they just started growing cotton back then, because it was so expensive to water their corn. They were like, hey, let's try growing cotton, and so they built a brand new cotton gin up there, which was state of the art, and those farmers up there didn't have any cotton equipment yet, so we would haul our equipment up there and strip cotton for them. You know, it's all irrigated cotton, phenomenal cotton up there.
Right.
And so we did that, and then at the same time, my dad's crop insurance agent said, "Hey, boys, y'all want to sell some crop insurance?" So we're like, "Oh yeah, we don't know anything about it, but we'll you know we know a little bit about it or what it does, but not enough to sell it." So we got our license, and my brother Jacob and I started selling crop insurance in 2005, and we I guess almost 20 years now we're still doing it. So.
All right.
But yeah, we farm and ranch a little bit. You know, run cattle as well. Um, but most of the time, my oldest brother runs pretty much the day to day farming operation. But Jacob and I were pretty swamped with all the crop insurance business.
I mean, I imagine it's pretty easy to sell your product whenever it's something you've used yourself and you've seen it work.
Exactly. Yeah. Yeah. And that's the thing. You know, like I said earlier, farming and ranching is so much more expensive than it used to be, and you want some sort of protection. You know, that's what we're here for, protecting you whenever you have something bad happens. You know, and especially in Texas, we definitely have a lot more droughts than we do have floods.
Zach, what's a good way for people to get a hold of you if they're watching this and they're like, you know what, this last couple weeks have really kicked us in the pants, and we think we need some crop insurance?
Yeah, so if you go to our website, agsouthwest.com, we got all our numbers on there. Jacob and I pretty much go anywhere to sell insurance. But we also have three other agents that work for us as well. So scattered across the state, and they're just as knowledgeable as we are, and so that they'd be good to contact too. But all the federal crop insurance, just so it's all federally regulated, so it's all the same exact price. So, if we give you a quote for a certain policy, and a competitor gives you a quote for the same policy, it's gonna be the same exact price. So we all work on service. Customer service is the name of the game. So that that's that. So they kind of know that. Also, there's deadlines. So certain deadlines to insure your crop.
Mm-hmm.
December 1st is the pasture, rangeland, and forage insurance. That's the deadline there. Federal crop insurance for corn. Depending how far south you go, for corn and grain sorghum, the deadline for down south is January 31st. Up here, it's February 15th. And then cotton is February 28th up here. So you have all certain deadlines as well, too. So trying to think this upcoming deadlines we have. July 15th we have annual forage deadline. So if you have graze out oats, graze out wheat, Sudan hay grazer that you plant, any of those crops that you plant, that deadline to sign up is July 15th. Followed by September 30th is for your fall planted wheat or oats that you harvest for grain. That's a September 30th deadline, and then again we have our December 1st pasture, rangeland, and forage, which is probably the most popular amongst most Texans, most ranchers, because we have so much more rangeland and ranches in Texas than we do farm ground. There's a lot of acres insured under the rainfall insurance, and that deadline is December 1st.
Well, all right. Well, we'd like to thank Zach Garrett with Ag Southwest Crop and Drought Insurance. We'd like to thank Ag Trust, our lending partner, for letting us use their building to film this. And we'll be back with you in a couple weeks with another episode.
Thank you, guys.
Thank you.